Hello viewers, so welcome to my channel. I'm Hasham. So last two videos I have explained you about the introduction to taxation for the assessment year 24-25. So two videos I have explained you that the new tax regime was applied by default scheme. Automatically that new scheme will be applied, but if the assessee wants to continue with the old scheme, he can continue. He is having the option. That's why it is called optional scheme. The old scheme is the optional scheme, new scheme is the default scheme. What is the difference? In the old scheme, the rate of tax is higher, but the deductions, exemptions are given. Whereas in new scheme, the tax rate will be lower, but the exemptions and deductions are not allowed. So some of the differences are there. So in examination, you have to write that we are writing the answer for this problem according to the old scheme or according to the new scheme. You must write this point in examination. So what are the differences? Last video I have explained you. If you have not watched, I suggest you go to the playlist of my channel. Select the subject income tax for the assessment year 24-25. Watch the first two videos, be clear with the concept, then we'll start. Now, in this video, I have taken up the topic income from house property. Actually, income from salary is also there. Afterwards, I will start because I am getting so many requests from my student to start the problems on income tax. They are eager to start the problem. See, the theory of income from house property is same. So, if you want the perfect, complete knowledge about the income from house property, go to the last year's videos. 23-24 assessment year, already it is uploaded. In the playlist, you find out income tax for the assessment year 23-24. Select the video for income from house property. 2-3 videos are there on theory. Be perfect on the theory, then you come to the problem. Now in this video, I have taken a few problems, and before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Without having the problem, you cannot understand the lecture. So always keep ready the problems. First 5 problems I am going to explain in this video. Take the screenshot of the first 5 problem answers, then I'll explain every point in detail. Now, in examination, you may get a question for 12 marks regarding this computation of income from house property. And it's very simple to understand the procedure of computing income from house property. Very few provisions are there. Compared to other heads like income from salary or profits and gains, we have so many provisions. But here the provisions are very less. So first of all, I'm reading out the first problem. On 1st April 2023, Sri Bhupesh is the owner of the house which is let out to Sri Mohanlal on a monthly rent of 7,500. So here we are concerned only with the owner, not with the tenant. The owner is Sri Bhupesh. So when he has let out 1st April 2023 and received 3 months advance rent and 12,000 as deposit. Normally it's a practice to receive some deposit, some advance rent at the time of letting out. But Income Tax Act says we should consider only the rent of the year. The advance received or deposit received should not be considered while computing income from house property. The municipal rental value, MRV, is 60,000 per annum and the rent of similar building is 8,000 per month. Rent of similar building means fair rental value. Fair rental value means the rent of the similar building in the same area, right? This should be considered for calculating GAV, gross annual value. Sri Bhupesh incurs the following expenses: municipal taxes 6,000, insurance fire 300, interest on loan taken to construct the house 15,000, ground rent 250, repairs 3,000, collection charges 500. Compute the income from house property for the current assessment year. 1 point. Number of deductions were there earlier, but presently only 2 deductions are allowed under section 24. 24A is the standard deduction, that is compulsory 30% of NAV. And second deduction is interest on loan taken to purchase the house, to construct the house, to renovate the house, to reconstruct the house. For these purposes, if loan is taken and interest is paid, the interest paid will be allowed as deduction under section 24B. Only two deductions. Regarding other like ground rent, repairs, connection charges, insurance, no deduction will be allowed. So in examination, after computing income from house property, give a note. No deductions are allowed for insurance, ground rent, repairs and collection charges. No deduction is allowed. Just give a note, right? Now, how to compute the income from house property? This is the first problem. See here. Computation of income from house property of Sri Bhupesh for the assessment year 24-25. Now, gross annual value. The format is very simple. First, we have to calculate gross annual value. From gross annual value, municipal taxes, if it is paid by the owner. Only if it is paid by the owner, then only deduction will be allowed. Then we'll get net annual value. The gross annual value minus municipal taxes will get net annual value. Now, deductions under section 24. Standard deduction under section 24A. This is compulsory. Every problem. It will not be given in the problem. You must know it. You have to provide it. So 30% of NAV. NAV how much here? 90, 30%. Interest on loan taken under section 24B. These two are the only deductions. No other deduction is allowed. Now take the total of these two and put it in the outer column. Now 90 minus 42, 48,000 is income from house property. The only thing to be remembered is how to calculate the gross annual value in working note. GAV is higher of the following three amounts: MRV, FRV, ARV. MRV stands for municipal rental value, which is given in the problem 60,000 per annum, right? And fair rental value, rent of similar building, it is given in the problem 8,000 per month. So 8,000 into 12, 96,000. Actual rental value, at what rent it was given? 7,500. So 7,500 per month into 12, 90,000. So the higher of these three amount, 60, 96 or 90, whichever is higher, that is the gross annual value. So in our problem, 96,000 is higher. So we got the gross annual value 96,000. So you have to proceed like this. So 96,000 minus municipal taxes. Here it is given he has paid municipal taxes 6,000. Deduction is given 6,000. 90,000 is NAV. 30% of 90,000 is 27,000. Interest on loan taken, it is given interest on loan taken to construct the house 15,000, given in the problem. I have taken 15,000. Take the total 42,000, 90 minus 42, 48,000 income from house property. But here in examination you have to write a note. This is note number 1. Then note number 2. No deductions are allowed under section 24 regarding insurance, ground rent, repairs or collection charges. You must give the note. That's it. First problem completed. Now see the second one. Mr. Raghava Reddy is the owner of a house property whose municipal valuation is 2,50,000 per annum. MRV, municipal rental value. And standard rent 3,60,000 per annum. There was no standard rent in the previous problem. There are two types of problems, two types of houses. The houses which are not governed by Rent Control Act. And secondly, the houses which are governed by Rent Control Act. So how to identify? If in the problem standard rent is not given, assume that the house is not covered by Rent Control Act and this provision will apply. But in the second problem, standard rent is given. Now the procedure of calculating GAV will be different because the house is governed by Rent Control Act. Standard rent 3,60,000 per annum is let out on a monthly rent of 25,000 and fair rental value 2,10,000. So four values are given: MRV, FRV, SRV and ARV. municipal rental value, fair rental value, standard rental value, actual rental value. Municipal taxes due 30,000, out of which 15,000 is paid so far. The income tax provision is whatever municipal taxes paid, that only will be allowed. If it is due but not paid, not allowed as deduction according to the provisions of Income Tax Act. So here 30,000 was the municipal taxes, out of which only 15,000 paid. So only 15,000 will be allowed as deduction. Other expenses, repair, ignore, insurance, ignore, interest on loan taken to purchase the house, 45,000 allowed as deduction under section 24B. The tenant has not paid last 1 month rent. It is not unrealized rent. He has not paid. It is outstanding rent. That means he may pay in the next year. So outstanding rent should not be treated as unrealized rent. Unrealized rent ka matlab the owner cannot be able to recover the amount. It is bad debts, the irrecoverable rent, but it is not irrecoverable. The tenant has not paid. He may pay in the next month. So outstanding rent should not be considered. We have to take the whole year's rent. Find out the income from house property for the current assessment area. Every problem, 1 or 2 new points you come across. First point is, here the house is governed by Rent Control Act because standard rent is given. Secondly, 1 month rent is outstanding, does not make any matter. Even if it is outstanding, we have to take for the whole year because that is not unrealized rent. Now, computation of income from house property of Mr. Raghav Reddy, same format I have taken, but the house is governed by Rent Control Act, so GAV is calculated in the following steps. Now, carefully you see. These steps we are applying only because standard rent is given. When standard rent is given, house is governed by Rent Control Act. Step number 1, ERV, expected rental value, is higher of the following 2 amounts. The 2 amounts are MRV and FRV given in the problem. MRV is 2,50,000, FRV is 2,10,000 given in the problem. Whichever is higher is the ERV. 2,50,000 is the ERV. Step 2, calculating the adjusted ERV, which is least of the following 2. The first step we have taken higher. Second step we are taking the least of the following 2. What are the 2? First one, ERV, what we have calculated in the first step. In the first step, ERV is 2,50,000. So I have taken ERV 2,50,000. Second one, SRV, standard rental value, given in the problem 3,60,000. Now, whichever is lower is the adjusted ERV. So, which is the lower? 2,50,000. This is called adjusted ERV. Now, the third and last step, the GAV is higher of the following 2. Gross annual value is the higher of the following 2. First one, adjusted ERV, just now we got 2,50,000. And secondly, actual rental value, ARV, that is given in the problem 25,000 per month, let out on a monthly rent of 25,000. So 25,000 into 12, 3 lakh. Whichever is higher, 3 lakh is higher. So GAV is 3 lakh. Remember, these 3 steps we will follow to calculate GAV. If the house is governed by Rent Control Act, when we can know? If standard rent is given. That's it. Here standard rent is not given, so directly higher of the following 3 we have taken. That is the difference. Now 3 lakh is the GAV. Municipal taxes actually 30,000, but 15,000 only he has paid. 15,000 reduction. NAV 285. Standard deduction under section 24A, 30% of NAV. 30%. This is fixed. The rate is fixed. 30% of 285,000, 85,500. Interest on loan taken to purchase the house, 45,000. Take the total 85,500 plus 45,000, 1,30,500. Subtract 2,85,000 minus 1,30,500, 1,54,500. That is the income from house property. That's it. 2 problems I have explained. Now see the third problem. Sri Sunil Kumar, a senior citizen, owns a house in Chennai. So he is the owner. It has been let out on a monthly rent of 10,500 and 2,000 per month towards service charges. So every month he is charging two amounts. 10,500 is the rental amount and 2,000 are the service charges he is charging. Now municipal rental value MRV is 7,500 per month and rent of similar house, that is FRV, is 10,000 per month. Standard rent 8,400 per month. Again, the house is governed by Rent Control Act. The owner incurs the following expenses. Local taxes 12,960. Local taxes means municipal taxes. Then lift maintenance, these are the services provided. He is taking the service charges 2,000 per month and also he is providing the services. 6,200 lift maintenance and water charges 2,000. Suppose if he is not charging any service charges, then this amount will be deducted from actual rental value. If service charges are not charged, then whatever services he is giving regarding lift maintenance and water charges, this amount will be deducted from ARV. But in the current problem, the owner is charging separately for service charges 2,000 per month and also he is spending some money on the services. Income tax axis. These service charges should not be taken in income from house property. It should be taxable under income from other sources. So 2,000 per month, so 2,000 into 12, 24,000 is the service charges received. From that, deduct the services, cost of services, lift maintenance 6,200 and water charges 2,000, 8,200. So 24,000 minus 8,200, that is the amount taxable under income from other sources, not under income from house property. Repairs, ignore. Interest on loan taken to construct the house 9,600 allowed, including the penal interest 1,000. Again, income tax act says interest on loan will be allowed as deduction under section 24B, but any penal interest comes from penalty interest. When interest is not paid on time, some penalty will be levied. That penalty interest is not allowed. So out of 9,600, 1,000 is not allowed. Only 8,600 will be allowed. Compute the income from house property. So I have explained. Now we'll start. The house is governed by Rent Control Act. Sri Sunil Kumar is the owner. I am not writing the complete sentence. Computation of income from house property of Sri Sunil Kumar for the assessment year 24-25 you have to write. Now GAV, next municipal taxes, NAV deductions are given. Now GAV. The house is governed by Rent Control Act. So GAV is calculated in the following three steps. The first step, ERV is higher of the following two. MRV, FRV. MRV is 7,500 into 12, 90,000. FRV 10,000 into 12, 1,20,000. Whichever is higher. 1,20,000 is higher. This is the ERV. Adjusted ERV is least of the following two amounts. ERV or SRV. ERV we got 1,20,000 and SRV is given in the problem 8,400 into 12, 1,800. Whichever is least, 1,800 is least. This will be adjusted ERV. Now GAV is least of the following two amounts. The first is adjusted ERV 1,800. Secondly, ARV, actual rental value, 10,500 into 12. It comes to 1,26,000. Whichever is higher, so 126,000 is higher. So GAV is 1,26,000. Municipal taxes given in the problem, local taxes 12,960. 12,960. Deduct 113,040. This is the net annual value. Less standard deduction 30% of NAV 33,912. Interest on loan taken 8,600. We have not taken 9,600 because 1,000 is penal interest, not allowed. 8,600. Total 42,512. Now subtract, we'll get 70,528. This is the income from house property. That's it. Now in working note you should write down repairs and repairs will not be allowed as deduction. Right? And lift maintenance and water charges are allowed as deduction from service charges received. and taxable under income from other sources. So here income from other sources, service charges received 2,000 per month into 12, 24,000. Minus lift maintenance, water charges 8,200, total 15,800. This is taxable under income from other sources. Now we'll come to the fourth problem. Problem number 4. From the following particulars given below, compute the income from house property for the current assessment year of Srimati Manisha. Owner is Srimati Manisha. So heading, computation of income from house property of Srimati Manisha for the assessment year 2024-25. Same format. Now first you see the problem. Municipal value means MRV, municipal rental value. And rent received 55,000, due 5,000. So total rent of the year is 60,000. ARV is 60,000. Date of completion of construction 31st August 2023. The first time when the construction was completed, date is given. Land revenue is 600. Ignore. No deduction is allowed for land revenue. Municipal taxes 10%. This 10% of what? Municipal rental value, MRV. Here municipal value is given 50,000. So municipal taxes will be 10% of 50,000, 5,000. Then fair rental value, FRV 72,000. Nature of use let out for commercial purpose. It does not make any difference whether it is let out for commercial purpose or residential purpose. Repairs, ignore. Ground rent, ignore. Cost of facilities provided to tenant 4,600. The owner is not charging separately service charges just like the previous problem. He is just providing the services. So this amount 4,600 will be deducted in ARV. Right? Note, municipal taxes and repair expense are paid by tenant. New point to be noted. So whenever you are watching this video or listening the lecture, keep a notebook, pen, calculator ready, and whatever I am explaining, note it down, because so many provisions are there are chances you will forget it. So to remember, always maintain a running note. So here I am telling, previous problem I told you, municipal taxes if paid allowed, if it is due not allowed. Second condition, municipal taxes if it is paid by the owner, then only it will be allowed. If it is agreed to be paid by the tenant, not allowed. Here it is given municipal tax and repair, so completely ignore it. Municipal taxes are to be paid by the tenant. Agreement is there, no deduction will be allowed for municipal taxes as it is payable by the tenant. The house is constructed by taking a loan of 5 lakh at the rate of 15% on 1st November 2021. And no amount of principal is repaid so far. Interest is paid as and when it is due. This is the complicated point. Income Tax Act says any interest paid prior to the date of construction, that interest will be allowed as deduction in 5 annual equal installments. So we have to calculate how much interest SSC has paid before the date of construction. Here the date of construction is 31st August 2023. So before 31st August 2023, the year ends on 31st March 2023. So up to 31st March 2023, we calculate interest. That is called prior construction interest. And that prior construction interest will be divided by 5. 1/5 of that prior construction interest will be allowed. Apart from that, current year's whole year's interest will be allowed. That is the only new point. Now see here, GAV, format is same. Now GAV is higher of the following 3. In this problem, we are not given any standard rent. House is not governed by Rent Control Act. So directly 3 amount, MRV, FRV, ARV. From ARV 60,000 minus 4,600 services provided, that will be deducted. So higher 50,000, 72,000, 55,400. Whichever is higher, 72,000 is the higher. So 72,000 is the GAV. Municipal taxes are not allowed as deduction because it is agreed to be paid by the tenant. This point you should write down in working note in examination. So NAV, 30% of NAV we got it, interest on loan. This is the most complicated point in this problem, 96,250. How we got it? I'll explain you. The loan was taken 5 lakh rupees at the rate of 15% interest on 1/11/2021, 1st November 2021. Accounts are closed every year on 31st March. So after 1/11/2021, the next year end is 31st March 2022. So we have to calculate November, December, January, February, March. So first 5 months interest will take. Interest from 1/11/2021 to 31st March 2022. 5 lakh into 15% into 5 by 12. Because the loan was taken on 1st November and we are closing the accounts on 31st March 2022. So 5 months interest, it comes to 31,250. Then interest from 1/4/2022 to 31st March 2023. The construction was completed on 31st August 2023. But we have to calculate interest up to the last date of the previous year. That is 31st March 2023. After 31st March 2023, we should not take into account as a prior period interest. Right? So here, 1 year, 5 lakh into 15%, 75,000. Now you add up both, 1,06,250 is the total prior period interest. And this prior period interest will be divided by 5. So 21,250. This is the 1/5 of the total interest before construction. And current year's full interest, 5 lakh into 15%, 75,000. The total interest comes to 96,250. That is the total interest amount. Now add up this to 1,17,850. Here NAV is less, 72,000 is the NAV, but deductions are 1,17,850. So if you deduct this, you will get loss. 45,850 is the loss from house property. There is no profit because NAV is less, whereas deductions are more. So you are getting negative figure, loss from house property. That's it. Now one more last problem, that is problem number 5. See the problem number 5. On 1st April 2023, Mr. Manohar purchased a house in Hyderabad for residential purpose for 23 lakh. For this, he took a loan at the rate of 10% from Central Bank of India. When loan is taken, interest paid will be allowed as deduction under section 24B, which has been let out to Mr. K.R. Reddy on a monthly rent of 20,000 ARV. We are not concerned with the name of the tenant. The house was occupied throughout the year. The MRV is 1,20,000, municipal taxes 10%. So 10% of MRV. So 10% of 1,20,000 is 12,000. Standard rent. Again standard rent is given. The house is governed by Rent Control Act. K.R. Reddy could have obtained a similar house at a rent of 14,000 per month. This is the FRV. During the year, Mr. K.R. Reddy did not pay the rent for the month of March and vacated the house. That means he has paid the rent only for 11 months and 1 month the rent is due and he has vacated it and left. Without paying the rent, he has left. That is called unrealized rent. So out of 12 months, 1 month rent is unrealized. So we should take only 11-month rent. Compute income from house property. Now, Mr. Manohar is the owner of the house. Computation of income from house property of Mr. Manohar for the assessment year. GAV, same format will write down. Now, GAV, step 1. ERV is higher of the following two, MRV and FRV. MRV is 1,20,000, FRV 14,000 per month into 12, 1,68,000. Whichever is higher is the ERV. So 1,68,000 ERV. Second step, adjusted ERV, which is least of the following two, ERV or SRV. ERV we got 1,68,000. SRV, standard rental value, 1,50,000 given in the problem. The lower amount is 1,50,000. Now GAV is higher of the following two, adjusted ERV 1,50,000 or ARV. Now see here, GAV is higher of the following two. Adjusted ERV is 1,50,000, we got it, and ARV, actual rental value, is only for 11 months. because 1 month he has not paid the house and vacated the house. It is called unrealized rent. So 2,20,000, whichever is higher, 150 or 220. So 2,20,000 is higher. That is the gross annual value. So GAV 2,20,000 minus municipal taxes. 10% is given. 10% on what? MRV. Municipal rental value ka 10%. That comes to 12,000. So 2,08,000 is the NAV, net annual value. Less standard action 30% of NAV and interest on loan. He has purchased the house by taking a loan of 23 lakh on which 10% is the rate of interest. So interest on loan is 23 lakh into 10%, 2,30,000. So 2,30,000, take the total 2,92,400. Our NAV is only 2,08,000, but deductions are 2,92,400. We are getting negative figure. 2,08,000 minus 2,92,400. You will get minus 84,400. That minus is nothing but loss from house property. That's it. So in this video, 5 problems I have explained. Watch the video 2-3 times. Definitely you will get the complete command on how to compute the income from house property. And inshallah we'll continue the next problem in the next video, but only few problems because time is very short. We have to cover up all the units. So inshallah the few problems we'll do on house property, then we'll switch over to other heads like profits and gains and capital gain, other sources, salary, etc. So keep watching. To make some running notes so that you can be able to remember, take interest, enjoy learning. Don't take it as a burden. Definitely you will enjoy in writing this exam of income tax. Inshallah, we'll continue. All the best for your preparations.